Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales and sponsored by Truffle Specialist Finance. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at secured loans. Secured loans, also known as second charge mortgages, could be an option for property owners considering additional finance. But when are they an appropriate solution? How do they differ from remortgaging or further advances? And what are the practical steps involved in arranging them? Well, with me to discuss this are James Rainbird, Managing Director of Truffle Specialist Finance, Sarah Stroud, Director at Truffle Specialist Finance, and Liam Schewitz, Director of Lima Money. Hi all, thanks for joining me on this episode.
Hello.
Hi, good morning.
Morning.
So, James, let's get into this then. And before we start the main discussion, tell us a little bit about Truffle Specialist Finance.
Okay. Hi, good morning. Truffle Specialist Finance, we have been trading now successfully for the past 19 years. We are primarily a second charge mortgage packager. So we deal with intermediaries pretty much throughout the whole of the UK. And we are lucky enough to work closely with Cornerstone Network and their appointed reps, brokers, for second charge mortgage inquiries. So yeah, that's pretty much a little bit about Truffle. Sarah can go into more detail with regards to product specifics, etc. But yeah, we've got a wide panel of lenders in the second charge mortgage industry. We've got strong relationships, working relationships with directors at board level within a lot of our banks, which then we can pass that knowledge, those relationships down then into the intermediaries within the Cornerstone network. So I think that's important for all of the Cornerstone ARs and advisors to know that the relationships that we have within our lenders is very important, especially in the specialist mortgage market as well, where if deals are outside of criteria or there's a bit of turbulence on a deal, it's important to have those relationships in place to ensure that the appointed rep within Cornerstone can provide that solution to their client. And I think off the back of that, then it's important for the ARs to have to retain their clients, which is important in today's market. It's very competitive, and clients are the backbone of the business. So ensuring that you can retain the clients through working with a packager like Truffle is really, really important.
And relationships is a theme that has come up a lot in this podcast series, James, and I'm sure we'll pick up on that with Liam. But let's get into the discussion of the topic today. So, Sarah, to come to you then, tell us, what is a second charge mortgage?
Second charge mortgage is simply a mortgage that will sit behind the first charge lender. So as an example, if I had a mortgage with Nationwide and I wanted to raise additional funds, and for whatever reason Nationwide wouldn't agree those, or I was unable to remortgage due to high early repayment charges, I would then look at a second charge mortgage, which would enable me then to raise the funds for a specific reason, whether that's home improvements, consolidation, paying a tax bill, paying school fees, there are multiple reasons as to why a person would arrange a second charge.
And are there any occasions where these type of loans might not be suitable, Sarah?
There are occasions. Some lenders, for example, if the client has had mortgage arrears with their first charge lender, then there are sometimes criteria points in place where they may not be able to get consent from the first charge lender. But then we have other lenders then that will offer what's called an equitable charge, or referred to as a unilateral charge. And that just means that the second charge mortgage can go ahead, but we do not need the consent of the first charge lender.
Thank you. Liam, if I can come to you. So first of all, tell us a little bit about Lima Money.
Lima Money came out. I was in specialist lending pretty much the same amount of time as James. It's really quite strange because we know all the same people. So for sort of 20 odd years, I was working at sort of director level to to promote second charges, bridging finance, specialist finance. And I think when COVID came along and some changes in my life, I thought, you know what, I'm going to go on the other side, the other side of the phone, and open a mortgage brokerage that it encompasses specialist finance as well. So we've been trading for 5 years, and it's been great to sort of see the market from a mortgage broker's point of view, and have those less sort of guarded sort of conversations with mortgage brokers about product placement for specialist lending and what their barriers to accessing the products are.
And how much appetite are you seeing for second charge mortgages, Liam?
Yeah, a great deal. I think back at just before the market crashed in 2008, second charges were putting out about, I think it was about £1.6 billion. And for a long time, it sagged after that. The market took a long time to recover.
Yes, yeah. The market's come a long way in certainly the second charge mortgage market has come a long way since then. I think it was deemed quite sort of high ERCs, kneecap sort of finance. Why would I consider a second charge mortgage? Well, regulation, thankfully, has, tidied an awful lot of that up. And I think, a lot of packages, reputable packages, are in line with that. But yeah, the second charge mortgage market has come a long way now, where rates, I think Sarah starting, with a 5, they're quite appealing to consumers, where they're unable to raise additional funds on a remortgage, or any sort of capital raising. A second charge mortgage can really help now. Affordability is quite reasonable. Loan to values are quite high as well now. So yeah, I think that the second charge mortgage market has come a long way.
Yeah, and it's grown back to those sort of days pre-crash, and that's a good thing. It shows that brokers are really sort of identifying the opportunities far better than they did for a window of time where they probably should have been used a little more, perhaps.
Yes, yeah. And I think from your side, Liam, now that you can see it from both sides, it probably is. It's important for you to retain your clients. So offering a remortgage, further advance, and a second charge mortgage now is very important for a number of reasons, to retain the client, and also to ensure that they've got the right product, and also they've got the right protection in place. Your customers have got the right insurance in place. Is that right?
Yeah, I think you raised some good points there, James. I think, your common and garden mortgage broker has got such a plate full of demands on their time each day. What does your first time buyer do after they buy their house? Well, typically they do a load of home improvements, and if they're not financing that through debt, then they're secured debt, then they'll put it on things like credit cards, unsecured loans. Quite often bite off a little bit more than they could chew, or have the idea in the background, well, in a couple of years' time we'll wrap that up.
Yes, yeah.
If they don't associate your business with somebody as somebody who can provide that service prior to remortgage via a secured loan, then you do risk them going to the likes of Money Supermarket and all the cross-selling that comes with that. Okay, so yeah, there's definitely second charges make your clients stickier.
Yes, yeah, and I think we've seen quite a bit of that. We've got a product where we can do a simultaneous second charge on completion. So like you identified there, Liam, what's the first thing that you do when you move into your new house? You want a new kitchen, you want a new bathroom, etc., etc. We've got a product that we can do a simultaneous second charge on completion. Therefore, you haven't got to go and raise debt on unsecured. You can consider a secured second charge mortgage.
Yep.
And Liam, I'm interested that you talk about the fact that for a period of time, perhaps brokers weren't using these products as much as you think they should. Right now, do you have clients coming to you knowing they want this product, or is it something that you've generally got to guide them towards, or at least suggest to them, having spoken to them in detail about what they're trying to do?
I think the level of clients that are self-selecting is far lower than it was back in 2006, 2007, 2008, because at that time, of course, you had quite a large marketing push on daytime television, and that's largely gone. Okay, where clients are, it's seldom a client will, like I say, come and self-select with you, but what they're looking to do is raise funds ahead of a remortgage. That is typically where they are now. Depending on their circumstances, it could be that they've got a quite high loan to income when they took the mortgage in the first place, which is more than likely the more prominent reason that they cannot access a remortgage, or that they haven't had a mortgage long enough. At that stage, they'll find it difficult to get the further advance or the remortgage. Okay. In my experience in the past, brokers have said to me when I've been on sort of James and Sarah's side of the phone, well, I can't sort of raise funds now for them because they'll have an early repayment charge. And of course, the second charge sort of circumnavigates that because it's a bolt-on with a separate company. Okay. So in terms of self-selecting, it's a lot less. But in terms of awareness of the when you would use the property, that is certainly more prevalent than it has been for a while, I would say.
Yeah, we've been banging this drum, as Liam knows, for nearly 20 years with regard to the second charge mortgage product. And it still amazes me how many mortgage brokers still fail to recognize a second charge mortgage as a viable option and product that they need to have within their portfolio. They've got to have access to this product, to the product. Otherwise, they run the risk of losing that client. And I think Liam touched on it earlier. If a client needs to raise funds against their property, they will find a way outside of their mortgage broker. If the mortgage broker says, I can't do it on a remortgage, I can't do it on a further advance, everybody on the planet has got access now to the internet. They will find a way of raising those funds. And then unfortunately, that mortgage broker has potentially lost that client then, and a potential revenue stream as well. And the opportunity to ensure they've got the correct insurances in place as well.
Yeah. And also, James, to follow up on that point, I'm sure you and Sarah have seen advice gaps really at the start of the process. And again, I it's not to wag the finger at
yes.
Majors, okay, but it just goes to show the power of advice, really, because if you are addressing your clients' short to mid-term goals with their capital raising against their property, then you can advise them on the correct mortgage to take in the first instance. So a quick example on that would be a client who hasn't sort of had the correct advice, gone and taken a mortgage for argument's sake, or online, with the expressed view that they wanted to raise funds afterwards to cover the debt for the home improvements. And at that point, the problem, there are lenders who don't provide consent, as Sarah said. So getting the advice piece correct from day one and embracing the client's short to mid-term goals is really going to stand that relationship in good stead.
Sarah, let's talk briefly then about the nuts and bolts of these products. So tell us a little bit about what a broker needs to know about how these second charge mortgages work. How flexible are the terms? What sort of interest rates are we talking about? What do they look like in practice?
So the second charge market is as flexible as you can imagine. And I would go so far as say, unless the guys disagree, that we have more flexibility in the second charge space than we do in the first charge. So we can tailor fixed rates that run for a duration of 2 years, 3 years, 4 years, 5 years, which then gives the client then total flexibility to match the first charge arrangements. Interest rate at the moment, as we've already touched upon, they will start with a 5. That is obviously dependent upon the client's specific circumstances, but they're in a situation now where they're a lot lower than they were before 2022. Obviously, we all saw what happened in September 2022 when the market suffered, increase in rates. But the product has so much flexibility attached to it. It has so much situations where we can do 6.5 times gross income, as an example, whereas the first charge space is a lot lower than that. You can make overpayments. There is just so many different things. And I think it touched again on what Liam said, that the second charge market has so much to offer, and nobody actually wakes up in the morning and decides to go and get themselves a second charge mortgage. What happens is that they have a problem that needs solving, and they'll go to somebody then who will help them solve that problem. So it's so important that they choose, the right mortgage broker who will then have a great relationship with a packager. And yes, a packager like Truffle who can guide them through the process. And we as a company will spend as much time that's necessary with our mortgage brokers, and then almost educating them on how a second charge works. What do you need to look out for when you're talking to your client about additional borrowing? Talk about rates, talk about flexibility. We have so much knowledge within the company, and we want to share that. And we want to help those advisors keep their clients, grow their own client banks through referrals because of the service that they've had. But I'm passionate about second charges, and anybody who works with me would absolutely know that. I done my first second charge as a mortgage broker, which coincidentally went through Pink Pick Loans, which is what we were formerly known as. And then I joined James then nearly 13 years ago. And there's not a day that goes by where we don't love this industry, but we absolutely need the support of mortgage brokers to embrace the product, to understand it, and then, just get the clients to maybe look at different options of borrowing. That's all we ask for. And then hopefully, all being well, the right outcome is there for the client, because that's what this is all about, is the right outcome for that client.
Liam, the key message coming through on this episode then is the invaluable role of the mortgage advisor in terms of having enough knowledge about this product to effectively guide their clients when it's appropriate. Now, we've touched on the fact that perhaps not all advisors are doing that, or maybe they don't feel confident in doing that. In your opinion, what more needs to be done to make sure this is in a broker's toolkit?
It's a great question. I think it's in terms of identifying the opportunities and the need for the product. That's an education piece, and I think in my experience, and I dare say that Sarah and James would verify this, is when a broker starts to recognize those opportunities, then it begins to snowball, because there's no dancing on a pin over it. It's a far more lucrative part of the market than your standard mortgages in terms of your commissions, basically. So it's an education piece, and it's getting the saturation of the recognition of the product, when to use it, how to use it, and again, it's not just about your standard stuff of home improvements and consolidation. We do things like business loans. I've got quite a large case going through at the moment where the client has had to leverage funds against his existing property for the deposit on his new property, and that has come along with a bridge as well, because it needs to be closed off this month. Okay, with the remortgage to follow. Now, if you take that case in and of itself, you're getting the commission off the second charge, you're getting the commission off the bridge, you're getting the commission off the term refinance at the end, plus there's a whole protection piece to be spoken about with your client. So it is an incredibly lucrative market to be involved in, and it does open the doors to various other bolt-on services that you will provide. But the advice piece is, I mean, if you'll pardon the pun, it's the cornerstone of how to deal with
Yeah.
Okay. And I think some brokers are just not confident enough to position it in their conversations at the beginning of their relationship with clients. Okay. When they're reviewing their clients. Okay. So when product transfers are a great opportunity for second charges. So if you have a client who is presenting with a product transfer opportunity, they might have had a change of career. They might have had wage stagnation, which is issue in this country for some time, of course, particularly in the public sector. Then their loan to income is going to be maxed out. At the intervention for the product transfer, they may be expressing to you, look, we want to consolidate some credit. Well, the second charge then should come into your thinking immediately. Yeah.
Yes.
You've got their credit file. They've expressed the need, and that's just one example. as Sarah said, I'm really passionate about this market as well, just because it offers a myriad of solutions to some pretty sort of small problems to pretty big problems.
Liam touched on some good points there. No two clients are the same either. So the flexibility of the product, understanding the marketplace is key.
Thank you. So I'm conscious of time. So one final question for you, Liam, and that is, in terms of support offered by the Cornerstone Network, how important has that been to you, and how vital is that for Stanhope advisors that are part of that network?
Well, I joined the Cornerstone Network in December. I had been at a previous network who were fine, but their attitude to specialist lending was not where I needed my business to be. So I moved to Cornerstone in December. The support that my business has received has been just second to none. And I'm not just saying that because I'm on a podcast for Cornerstone Network. I'm a passionate advocate for Cornerstone, okay? There's whichever field your business is operating in, or whichever sort of knowledge gap that you may feel that you have within your business, there's a resource to tap into in order to upskill. The referral process to exterior partners is fantastic, and there are experts within the business, such as myself, who are more than happy to take time to offer mentorship and coaching. So don't be shy. That's what I'm here for. Cornerstone's been brilliant.
That's a great place to leave it on. Well, thank you so much to my guests for this episode, to James, to Sarah, and to Liam. And thank you for listening to this episode of the Cornerstone Finance Group podcast.